Well, gold is glittering like never before against the backdrop of the West Asia conflict. But for many Indians, it's becoming increasingly difficult to buy domestic gold. Prices briefly touched nearly 1.7 lakh rupees per 10 grams. That's driven by global tensions and a surge in safe haven buying. Globally, prices have crossed $5,000 an ounce as investors rush to protect their wealth amid geopolitical uncertainty. But while markets celebrate the rally, consumers are facing a dilemma. Should they buy, wait, or switch to new forms of gold investment? Joining us to decode the gold rush and what it means for Indian buyers is Mr. Nitin Kedia, National General Secretary at All India Jewelers and Goldsmith Federation. Hi, Mr. Kedia. Thank you so much for joining us today on WION. Now, gold prices in India have surged to record high levels, touching nearly that 1.7 lakh rupees mark. For an average Indian buyer, what exactly is driving this spike? Is it the global tensions or is it the weaker rupee that's making gold even more expensive at home?
Good afternoon, Kanisha ji. Thanks for having me on your channel. Till now, I have been watching your channel for all the international updates, and it's really good to be here. See, what is happening is that geopolitical situation, and because of the geopolitical situation, the rupee has gone weaker, and both of them are making tea sweeter for the investor and bitter for the consumer. Now, what has happened that due to this phenomena, the rupee got weakened from 90.50 to 92.60 yesterday. And today we saw that RBI was intervening and it just opened around 91.60, 70. But overall, we all know that in short-term time, it's going to touch 93.6 and 94, and that's going to make gold more costlier in India. And internationally, it is now stable between $5,000 and $5,300. So I think that there's a rupee weakness which is going to play more role in gold prices getting stronger in India.
Right. And right. Mr. Kedia, speaking specifically about India, do you think gold can hit 2 lakh rupees? It has already gained more than 20% this year. So do you see prices moving toward that 2 lakh rupee mark?
Yesterday only we have released a report that gold looks to touch 2,20,000 in next 3 to 4 months time. And for that, it needs to cross 1,74,500. So once 1,74,500 is crossed, we will see more demand coming in India. Because last time when it was 1,80,000, the demand was phenomenal. Gold was trading around 20,000 rupees premium from import costing. So we think that if 1.74 is crossed, then in next 30 to 45 trading sessions, 2,20,000 will be a target.
All right, so 2 lakh looks like the next target. But let's talk about, a more retail perspective, from a consumer perspective, the wedding season impact that is. Now, India is one of the largest consumers of gold jewelry, but with these high prices, are families cutting back on wedding purchases, or India is, witnessing a shift towards lighter designs or even purity gold like 18K instead of traditional 22 carats?
See, AIJGF is a part of Confederation of All India Traders, and Confederation of All India Traders has got 8 million traders as their members across India. So time to time we do a survey like what is the demand going to be around marriage season or during Diwali or during Holi. What we have observed that on an average wedding, Indians spent around 12 lakh rupees. So there's a 12 lakh rupees average spend that Indians do in a wedding. And out of that, 25% goes to a gold. That means in every wedding, average gold bought is around 3 lakh rupees. So now what has happened that 3 lakh has not increased. Probably we have seen that 3 lakh has become 330, 350, not beyond that. So the volume, the weightage has came down. Earlier people used to buy 100 gram or 70 gram in a wedding. Now they are buying 30 gram, 24 gram, 35 gram like that.
All right, so clearly the weightage has come down. But speaking of things globally, gold has surged past that $5,000 an ounce mark and it's staying above that level. And major banks, they are predicting prices that could move even higher in a short term as well. So what is your reaction to that? Do you think we are entering a long-term gold super cycle?
See, long-term gold super cycle started in 2004. During 2013 and 2018, we saw some correction in that super cycle. I think that super cycle is going to continue. Having said that, we cannot expect 50 to 80% return every year. The return will get normalized to 12% to 15% per year. And I think that are fair returns if you talk about any asset class.
Right. And Mr. Kedia, another trend that we are hearing about is gold recycling with prices so high. Do you think Indians are exchanging gold jewelry rather than buying a new one? How big is that trend right now?
See, when prices were around 60,000, then we saw some gold recycling coming into the system. Then when it went to around 1 lakh rupees, then again we saw that recycled gold was coming into the system. But above 1,25,000, what we are seeing is that people are not coming for that. And you can see the charts which World Gold Council is sending. And in India, the secondary gold supply, rather than going up in these increased prices, in the higher prices, they have came down. So right now, people want to hold their gold and they are looking forward for 2 lakh 20,000 kind of levels.
All right, so looks like people are looking to reach that 2 lakh mark as far as gold prices are concerned. But traditionally, Mr. Kedia, Indians did buy gold jewelry the most, right? But younger investors, they seem to prefer digital gold or gold ETFs for that matter. What is it that you are spotting? Are we seeing a generational shift?
See, digital gold was a preference, but when SEBI came out with a clarification that it's not a regulatory platform, and we as an association also gave a guidance to our clients through WhatsApp, through social media, that see, if you are investing in these kind of platforms, then please be very cautious because they are not regularized, and you can uh, lose your savings because of any mishappening happening to them. So we have seen that record ETF buying is happening, and that is being done by mostly people who are into the age of 30 to 40 bracket. Mostly
Correct.
they are investing in a gold. And when I'm speaking to these kind of people, most of them, they are saying that they are doing this for their retirement planning. So I think
Right.
that the young generation has got very matured when it comes to investment.
All right, so looks like the younger generation is mature when it comes to investment. But Mr. Kedia, for you, now ETF versus physical gold, for someone looking to invest today, not wear gold jewelry, but simply protect wealth, what makes the most sense according to you? Is it physical gold, gold ETFs, or digital gold?
See, it's a physical gold. In ETF, you have every year maintenance charges of 1.25% to 1.75%. Let's say I bought 100 gram ETF and 100 gram physical gold. After 10 years, what will happen? I'll have only 90% of that gold. But in physical, whole 100 gram is going to be there. And secondly, what we have seen in last 6 months' time, that ETF prices are not in a parity with international prices or Indian derivative exchanges prices the way they are growing. So that's why we have seen recently that RBI came up with a circular that now they have to track the domestic exchanges prices. So I think a lot of things are need to be done in the ETF. And the second thing is the timing. That if something happens in the US market, you can't sell the ETF. But if you have a physical, you can go to a jeweler at night 12 also
Right.
and you can sell it.
Correct. And Mr. Kedia, if you could also highlight some of the risks that consumers should keep in mind while investing into any of these three categories.
See, the first thing is that they should monitor that they should not go beyond 20% of their portfolio in the gold. What has happened that in January we saw that people were coming and they were taking loan and they were buying gold, and we were very cautious at that time. We were raising the flags. I see this is not a phenomena to invest in the gold. You should not cross the 20%. Second thing, whatever the medium you are investing, whether it's a physical gold, if it's a physical gold, buy with a hallmark certificate. If it's an ETF, just look for the tracking loss. Just look for how they have given return in past 1 year versus MCX gold versus comics gold and versus physical gold. And third thing, if you are a digital platform investor, please stop that. Please take your money back and go back to ETF.
Right. So that's about the risks. But Mr. Kedia, another big global trend that we are seeing is record central bank gold buying. That's including from emerging economies. Is that a sign that countries are trying to reduce dependence on the US dollar and build safer reserves?
See, earlier dollar and gold both were considered as a safe haven. So safe haven is something which I'll be needing during the time of risk or during the time of emergency. So when Russian were denied that you cannot access your US treasuries for the war that they were having with the Ukraine, so it made a lot of governments think that if something happens to them, that it can happen to them also. So that's why we saw that they were hedging themselves with the gold. And but last month, if we see the table of the World Gold Council, uh, the euphoria which the central banks were having, now it has came down. Means they have not sold it. but the pace through which they were buying earlier, now it has came down.
All right, so that's about the global side of it. But Mr. Kedia, finally, for Indian consumers watching right now, gold is at record high levels and extremely volatile also. Should they buy now, wait for a correction, or stagger their purchases over time? What would be the smartest strategy?
See, from whole February, we are seeing that if you have, let's say, 10 lakh to invest, divide it into 40 parts, and let's say 10 lakh is divided into 40 parts, then it becomes 25,000. So buy 25,000 of rupees of gold every day, and from 1st April, means next quarter, we are very bullish on gold, and we feel that it can touch $5,800 to $6,000. So I think the staggered way or the daily SIP is better for any investor.
All right, Mr. Kedia, understood. Thank you so much for joining us today on WION. On that note, we'll let you go.
Thank you, Kanisha.
Well, clearly, gold may be shining brighter than ever, but for investors and consumers alike, timing and strategy will matter more than emotion. And with that, it's a wrap. I'm Kanisha Sarkar. Thank you for joining us on WION.